Hey, what's up traders? Today we are diving into one of the most effective ways to enhance your trading strategy by combining leading and lagging indicators. Whether you are new to the game or have been trading for a while, this concept can help you make smarter decisions and, more importantly, boosts your profit. So stick around because by the end of the video, you will know exactly how to use these tools together for maximum results. First thing first, let's break down what these indicators actually are. Leading indicators give you signals before a trend starts. Think of them as your early warning system. They help you predict what might happen next. Examples include the RSI indicator. These indicators tell you whether a market is overbought or oversold, giving you clues about the potential reversals. Now, lagging indicators are all about confirmation. They tell you after a trend has started. A classic example is the moving average. For example, when the 50-day moving average crosses above the 200-day moving average, it signals a potential bullish trend. But since it's based on past data, you are always getting the signal a bit late. So why would you want to combine these two types of indicators? Because together they give you a more complete picture. Leading indicators give you early signals, but they can sometimes be false alarms. Lagging indicators, while slower, provide confirmation. Let's say you are watching the RSI and it shows the market is oversold. That's your early signal to think about going long. But then you wait for a moving average crossover to confirm the trend is actually reversing. Now, you are reducing your risk by combining both indicators. Here is how you can combine leading and lagging indicators in your own trading strategy. Step 1. Choose your leading indicator. Pick one that suits your style. RSI or STOCHs are great for momentum-based strategies. Step 2. Choose your lagging indicator. Moving averages work well for long-term trends. You can use a 50-day or 200-day moving average for larger time frames. Step 3. Wait for confirmation. Once your leading indicators give you a signal, don't jump in just yet. Wait for the lagging indicator to confirm the trend direction. And the last step, execute your trade. Once both indicators are aligned, that's your clue to enter the trade with more confidence. And there you have it. Combining leading and lagging indicators is one of the best way to trade smarter, not harder. By balancing early signals with confirmation, you can improve your decision making and reduce risk. If you found this video helpful, don't forget to hit that like button, subscribe for more trading tips, and let me know in the comments which indicators you prefer to use in this strategy. Thanks for watching and happy trading.